Good morning. Welcome to OptionsTender. It's Monday, March 31st, 2025. It's the end of the month. We're ready for that rip. We have positive divergence on the daily time frame. I'm going to show you all of the positive divergences that had formed with making a new low today. We already had a fake break to the downside. This is a bear trap, also known or AKA a expanded flat correction. Okay, so we know where we're at, we know what's happening next, and we'll look for higher prices to come before making a lower high into the rest of the bear market here. So we don't have any structure to the downside yet on any higher degree. And so we'll take a look at all that good stuff. Okay, we're doing this intraday about 11:37 Eastern Standard Time, AM, by the way. If you'd like to get these videos intraday, consider becoming a YouTube member. It's 99 cents, comes with the Discord and our trade alerts. We added on some calls today. We put them out to the 24th. They were, I'll actually show you exactly what I did and why I did it on the cues. So make sure you stick around, okay? Play this at 1.25 speed or 1.5 speed so you can get this information quickly and go on to your other YouTube videos. So let's get going. We have SPX on the daily time frame, and then we'll work our way around and we'll go on the 65 as we do each and every day. And if you haven't watched our weekend analysis, we go through most of this stuff anyway. So you're going to see I updated my charts. We have this bearish rising wedge, and now we're fighting with this support area. We broke down from it, and I don't usually make too many pivots. You see this dashed line here? I just couldn't help it. It matches perfectly with this high, and then acted as support, and it's acting as support again. So it's just a really good geometric or pivot, whatever you want to call it. And so I added that in there too. And we're bouncing off of that right now. Okay, so we had a big down day on Friday and some follow through on Monday. I didn't think that was going to occur because of what Mondays have been doing. They've been doing the exact opposite of Friday, but we're back to ordinary business where Monday is bearish with Friday's move. So if Friday's usually bullish, then Mondays typically follow through. Anyway, we had our low broken here. We're well back above that. That is a bear trap. And what we're looking for is a snap back to the upside. And now we have a downtrend line that we can work with here. Now that we made a new low, we can add this downtrend line. If price breaks above this downtrend line, you know we're going to get a breakout, and we should see a continuation of this move to the upside. Now I have this box here just so we can visually see where I think the price action will go to. And you'll see on the Fibonacci's, but 5,900 to about 6,000. That gives us a 100-point range where we'll start to scale into our short positions again. Okay, let's look at some of the indicators here. We have our moving averages where we broke down from the 200-day moving average, back tested, and broke down again. So a lot of people will say, hey, well, that's bearish, but we're into support. We're not only into support, we have a daily positive divergence. That is going to snap back, and so we're going to have to cycle out of this before we head lower. You also see the 8 is down, the 20 is down. So, you know, you can call this knife catching if you want to, but I like to play into support and resistance. So if you want to be a little bit more conservative on these plays, then look for the breakout from 5,660 right here. Okay, that's also the downtrend breakout, depending on how long it takes to get there. That can adjust from the downtrend, but the horizontal is really important because it's the top, it's the breakout zone from previously, and then a back test and so forth. So if you want to be conservative and wait for some things to happen, maybe we get a couple up days, a down day, and then a continuation. So if you don't want to mess with that chop, then look for the breakout afterwards. And then you see the moving averages up top here. We have the 100-day moving average, and the 50 is starting to head lower. So this could be it around 5,900. Or if price wants to get above briefly to 6,000, we have great resistance there as well. It's a former high. And then you see support above. And then, again, support. So that's what we're looking for on a visual, on a traditional technical analysis look. And if you're not familiar, if you're learning here, traditional technical analysis, that's why I have separate boards here. We have support resistance, you have trend lines, and then you have patterns. So we have this bullish falling channel. You can also draw this as a wedge. You'll see that I did that on the cues. And so it's pattern recognition and breakouts from patterns and breakdowns from patterns and support and resistance. Okay, so that's why we take a look at that one. When we go to our other board, it will show you what the non-traditional technical analysis is. Okay, so McClellan oscillator, positive divergence. Price got into the oversold area with positive divergence. We're going to continue higher, very similar to this move here. Okay, not much difference between those type moves. So I can draw a little line there to show positive divergence, where price made a lower low, but the oscillator made a higher low. Okay, here's our OptionsTender setup with the MACD, RSI, and slow stochastic. And the first, right off the bat, and the most important, besides the McClellan oscillator, is the MACD. We made our bullish crossover, made a new low in price, but a positive divergence and momentum. This is going to cycle through. I'm telling you, it's going to cycle back through. Now, it may only go to the zero line before cycling back down to lower lows, but either way, we're gonna have our move. We're gonna have a bounce. Same thing with the RSI, no difference. Back to oversold and positive divergence, okay? Slow stoch, same thing. Now we're probably not going to get the momentum that we want until this starts to curl up, all right? So this is a much more sensitive momentum oscillator, and so we want to see this curl up, and then this will be a tailwind to the upside with the MACD. And that's what I mean with, forming a little bit of structure here. We made a new low, so we're going to have to see some sort of price action. And at any point, listen, we're talking about the tariffs. That's the biggest catalyst. It's all over the news that everybody's worried about, and the world is ending. So that's the catalyst we're looking for. At any point, Trump can, mention talks are on the table. We're going to pause. We're going to cancel anything to do with the tariffs, any bit of good news, or simply Liberation Day, April 2nd comes, and it's simply sell the rumor, buy the news. Okay? Sell the rumor, buy the news. Simple as that. So don't be surprised if, the whole point of me saying that is at any time we could get our ramp. It could be overnight tonight. It could be tomorrow. It could be going into Wednesday before that happens. But our setup is there. DMARC. Really nothing to see here. 1, 2, there's nothing to report here. Awesome oscillator. Boom. Positive divergence on the awesome oscillator. We're looking for a ramp, a rip. This should cycle up, probably get into positive territory before heading back down. Okay, let's go to SPY. SPY, I started off with this board here because I was going over with a friend. Well, why would buyers be coming in right now? You know, all this talk about bear markets, bad news is all over the place. Why would buyers step in now? You know, I said, first of all, we're in a support area. On the weekly time frame, we're probably going to see a nice wick through. So yeah, we're underneath the support here, but we're probably going to get back above it by the weekend, and it'll just be a wick, right? So what I was saying is, you have the market structure down here, either a 1-2, it could be a running flat, or a 1-2-1-2. Doesn't matter. The Fibonacci start from this down here lower, and so we have our Fibonacci's. I have it on the low here. You can do both. It's a cluster, fine. It works. So we're down to the 23% retracement. That's the first stop where you either get a reaction or you make new highs from if you're a bull. This is a 1, 2, maybe all of this is wave 3. And then you have an A, B, C for an expanded flat. And you're going to count this as a 5-wave move, right? And that flag was a wave 4. I don't think that's the case. The flag was higher than the 38.2%. And then you have a wave 5 done. That's how you're going to count it for a bull scenario. And then you're going to see a new high here. Now, the alternate bull scenario, okay, yes, there's an alternate for the bulls too, is that you get the deeper 382 wave 4 retracement. Wave 4 is typical. When you have momentum, it's typical you go to the 23. If you have a larger correction, the 382 is still a buying place. So we're going to have to keep this in mind when price gets to this point. It's probably going to stall there or close there, but I think price will break down even more in the next move. But I'll show you as we get through this how this is going to create buyers, at least for the moment. And the bulls will get stuck there as well. Okay, so we're thinking wave 4 is in here if you're bullish. And we should see a 5-wave move up and start creating that market structure to the upside. So a 5-wave, a pullback, another 5-wave, pullback, 5-wave. Okay, so that's why this is such an important area where price is trading around, and you have such a fight for the bulls and the bears. And you know, I mentioned on Friday's video, somebody had commented and say, "Why are you fighting the trend to the upside?" Well, there's no market structure unless you're on the 65-minute or 2-hour to the downside. Okay, there's one little high there in lower high, and that's just way too small for any significant move. If this were to continue to drop, this would be just Armageddon. Nobody would realize what is happening, and this would be just a massive move to the downside that will continue. Very similar to the Corona crash. If you traded through that, you know that today would have probably been down 7% by now. Okay, so let's continue on to the daily. And so this is where you draw it as a wedge. And this is the setup here. It's a wedge setup to go higher. And then I think it'll fail after that. But you have your positive divergence here. And you see how that's just forming a wedge. It's a pretty setup. Now, let's go to the divergences where we usually start. And here's the money flow index. It's very good at catching turns. Okay? Very, very good at catching turns. Now, the first divergence isn't always the last. So you have two divergences here. So now we have two positive divergences. And I think this is done. We're going to get our ramp at this point, and this will cycle all the way up. Bear trap, I'm telling you. Okay, the Bollinger Band. You can see the bottom of the band. This is another buy setup for the Bollinger Bands. RSI oversold into the bottom band here. we're at minimum going to go to the upper end. All right, a lot of the individual names here are they're well into their gap. We had the diamonds already close their gap. We're getting a bear trap. Okay, so we're getting a low here on the daily time frame. We're looking at 4-1. You know, maybe we make another. I don't know. I doubt we make another low, but I didn't think we'd make a new low at that anyway. So, and the whole reason why is because we're running out of time for our cycles, which we go through with our members. Okay, so we're running out of time, and so this is going to be a fast move. When it does get started, it's going to be a ramp. It's probably going to be pretty ruthless. Look at Friday's video. I showed examples exactly of where I think we are and what's happening, and this move is going to be relentless. All right, so we'll look for these clusters when we come into them. We have something on 4-1, but that's just an individual, so we'll see as these go. Does something happen here on the 3rd? We'll be looking. Let's go. Now, if you haven't watched the 2025 roadmap of where I think we're going right now, I have the my tags, my titles are very bullish. Stock market rally, green arrows. That's because we're at some sort of bottom, some sort of turn, and this is going to play out to this, going to resolve to the upside. I know it hasn't yet. It's hard to imagine that, but it's going to happen. And then when we start getting the resolution to the upside, that rip your face off rally, then getting into the turn up top, we'll start making our titles bearish with red arrows heading lower, because we'll be looking for price to turn back down. Okay, so that's why I have these titles. That's what I'm looking for, and that's where my primary positions are heading. It takes time for these to play out. I get it, but our primary swings are to the upside right now, and that's what my titles reflect. Let's go to the Qs. On the Qs, you can see our bearish, our bullish falling wedge. You see that forming. There is great support over back here if price wants to go lower, but we had a minor support area. I didn't draw this in just now just to fit this scenario. It was there, so we're getting a nice reaction off of it so far. If we do go lower, then you see that there's a really good support zone underneath. With all the positive divergences and such, I don't think that price is going to go further, but anything can happen. Okay, so again with the retracements we showed on SPY already. Same thing with the Qs. The retracements don't change. This is you had the wave 1 already come in. We're looking at expanded flat, aka bear trap. So you have your A, your expanded B that makes a new low, and we're looking for the C wave, a 5-wave move, impulse move to the upside. So bull or bear, you're all looking to the upside. Now, the one caveat for everybody that's looking for doom and gloom, here's what we're looking for, and I'll just show this on the Qs. If you think this bear flag is just beginning to play out and your measured move on this, if you're looking for the bear, let me get rid of this, your measured move for this bear flag to play out, you take your drawing tool, just draw the flag pole, and then you drag it to where the breakdown of the flag was. So then it's approximate. So you're looking for about 400. Your target's about 400 before this move is done, if you are in a bear scenario. That is one hell of a move. All right, we're going to see a big move to the downside, but not yet. Okay, so that would be your, and what we'll look for, and I'll just draw it in for you, if you're in that scenario, if you're in that camp, you're looking for a back test of that bear flag and get rid of all these retracements except for the 60, 70, 80. I'll leave all those in. Actually, it should probably only be the 60 and 70. So if you are in the doom and gloom camp, then price should not get above this zone right here. All right. So therefore, you have your initial move, your bear flag, and now probably on a lesser degree, a wave 1, 2, a much lower 3, 4, 5 to play out. All right. So there's a scenario for everybody, but I think that's the least likely scenario. SMH, bullish falling wedge. And at this point, this snapback, I don't think we're going to make a lower high here. I think we're going to get back into the zone. I still think we're still looking for 230, about 239 here. And we can even start to argue that now this has a 5-wave move in here, and we're just getting started with the lower degree. You have your 1, 2, and then likely a 1, 2, where you'll get a zigzag with a very brief pause in between, A, B, C, where you get a full retracement up here, maybe 240 before heading lower. IWM looks the same way. Remember, in the past videos, if you've been watching these, I was saying this was very confusing. You only have a 3-wave move. Either you're super bullish and you go to new highs, or something else has to happen where it was a 1-2, 1-2 setup. Now that we've resolved to the downside a bit more, it now appears that the SMH and IWM have a 1, 2, 3, 4, and 5-wave move, unlike the other markets. And these snapbacks should be pretty deep, pretty big moves here. I never trust IWM. This one can be just as bearish as ever by getting to this downtrend line, but I suspect it'll do the same thing as the rest of the market, break out from this downtrend here, and have a proper retracement from this 5-wave move here, and maybe get up to 225 or so. So we'll share those retracements in the room, but you also can draw another downtrend from here. So there's another one that's possible, and again, that's a lot lower than that 225. So just be careful with IWM if you're playing that one. DIA made a higher low, all right, off of this move, and so I think this AB continues to play out for a C, and then you probably have either a larger degree A, and then we get our B into the channel, and then lower for a C wave, and that could be a bigger picture correction. It's not really looking like the rest of the market, and yes, it could be a 1-2, 1-2, and that could play out in many different ways. So we'll just keep an eye on it. It's looking pretty strong here. I do think we make a new high and probably make it to about the 433 area before it's said and done. VIX. After the VIX broke out from 19, it had a falling wedge here, broke out, and then ramped up on Friday, and then we got our gap there. It's a gap and crap. We're breaking below support here at 23 now, and so this big thing here, I still think we can target 15, 16 area really fast. Okay, yes, we have some cycle lows coming in here. This could drop, like I said, relentlessly before heading again higher, and probably higher than this high here before said and done. SPY. Let's go to the 65 minutes. So we see all the daily positive divergences, and 65s are going to be a little bit different now. We're just making new lows, and so you can draw some positive divergences in there. I didn't change these these charts yet. So you can now look for that that wedge to start happening. I'll leave the bottom of the megaphone. That's an old pattern that we're looking at. We'll probably make it back into there. But today we might even reject off the bottom of it and then maybe hold on to 550 again. We were looking at breadth here too. And just to show you, a lot of these were over 1.0 as far as 1.2 as of last week. So there's a lot of contrarian bullish setups here in the put call ratios. Same thing with trend. It was really bearish above 1.0, and you get to that contrarian bullish setup, and that's starting to play out here. So we also looked at advanced decline here for the S&P. Was not that negative today. After making a brand new low, we were only down negative 100 and something, and you know, on our ADD intraday, I don't have my intraday charts up here. That's not what I show you guys. The ADD was well off of its lows from Friday, so we really had this positive divergence with the advanced decline, and the breadth was just you know, exceptionally well with the new low in. So we kind of knew that setup was there. That's why we put on the trade. So let's go through some of these indicators. And you know what? I forgot to do the McClellan Summation Index. So maybe we'll end off with that here today. So going quickly through our indicators, just so we can constantly look at these and how they develop each and every day. So we made our new low, but we held support. Okay, so all we did here, and we want to see this confirmation curl up. So the momentum, technically, we're making a positive divergence, but we can't confirm that until we have that bull cross there. So again, we might have, you know, a little bit of trouble getting this started, but then eventually we're going to break out from there and snap. And with a catalyst, again, that could be just a relentless move to the upside. So if not anything, it's just probably not a good place to be short. Now we have this downtrend here. We're looking for a breakout from the RSI, which is in oversold conditions. And same thing with the slow stoke. We're getting this early buy signal at this point, and breaking out from that downtrend line there. DMARC, probably nothing here. No real setup with the DMARC. Awesome oscillator. Just made a really, really bearish move here. And we'll see this cycle back up as we work some positive structure in here. That Bollinger Band, just riding it down, and then you get into oversold conditions with a at the bottom of the Bollinger Band. Outside of the Bollinger Band, that's a buy signal. Let's go to the Qs. Now on the Qs, you have this kind of setup here, and we're having trouble getting back into that wedge so far, that expanding triangle or megaphone falling wedge there. So we had a great setup going into Friday, but clearly that didn't happen. So we're still looking for the same thing. Nothing's changed. We're going to look for the gap, and we'll probably, you know, reject off at intraday going into tomorrow or so. So we'll probably have a little bit of trouble here, and then maybe Wednesday is our day when we snap back up. At any time, this could happen. But notice the targets don't change. And so you have 510 here to about 515, and even a little bit higher if we want to test the top of that megaphone again. And so the Lotto calls there, since we have 50% here and a 60% retracement. So 512s is our target. And so we took the 510s because of that visual there at about, I think it was 40 cents a piece, something like that. But we took some Lottos into this, and we're way out to the 24th of April, so we have plenty of time so they don't decay too much. I didn't want to press it. I think it's going to happen a lot sooner than that, but that's why I did that trade there. And I said that on Friday, if we go lower, we're going to add on to our positions, and we have. So this is how this looks. We have our 1 in here, an A, a B, and we're looking for 1, 2, 3, 4, 5 wave move into our C. By the time this starts to ramp and break out from that bearish, that bullish falling wedge, by the time we break out from it, sentiment's going to change, you guys. So, humans are very emotional. You're going to see a lot of people start to change their mind, and that we're going to go to new highs. And so in the beginning, we don't have any real bearish structure on the higher time frames. And so that's why I think this first move is going to be pretty steep. It probably will be into the 786. I don't know. It could be the 62 or 786. But I think it's going to be a deep retracement because there's still buyers in here for that bullish setup that I was talking about on the SPY chart. SMH. There's retracements. Retracements probably aren't the same. I have to change these retracements. I'm not going to go through those today because I think this scenario is different now. Now that I think this 5-wave move is, we may have a here's a downtrend line here, so maybe that comes into play, and that might match up here if we make this a channel. Ah, yes. Now we're talking. Okay, so in the bigger picture, we probably have a 5-wave move here, leading diagonal for the start of this move, and we'll get a pullback probably into pretty much into the area that I was talking about, with maybe 235 or so going into next week. I think all of this will play out into early next week, so that's what we're looking towards. Probably hit the top of the channel here. Nvidia should make a new high at that point. And that should be about the 50-60% retracement of this entire move. So now we have a channel that looks like it looks really good here. In the next move should be much lower into that channel after we get a near-term high here. IWM. We can probably end up doing the same thing. We'll probably, I don't know if this will work out as well, but if you make a channel here, not as well. We're not touching lows unless you have a little spike through there. I'll leave it here for now, but it's not as pretty as SMH. But again, this has a possible 5-wave move where the 5th wave here was the shortest. And we have a nice retracement back up to, and I'll have to look on the Fibonacci, see if they match up with this, but maybe to the channel. And if the Fibonacci's are higher as well, possibly a little bit higher. So we'll see. Definitely, if you're playing it, I wouldn't play above this channel here. VIX or DIA, the diamonds. So this pretty much is forming that same channel, right, that we're looking at for the others. And so it probably can be even drawn, a couple different ways. But that slope, I think, seems probably the best if we have on the daily time frame. Either way, I think this one starts to break out from this downtrend line. And then we'll look into maybe some price action zones here, about 435 or so with those retracements after I draw those in. What else? VIX, and then we'll end off with, here's the VIX, kind of breaking down there. So this was on Friday, we talked about it possibly getting back up to the 23. Now we certainly gapped over it. VIX is, it's wild. It's volatile. The VIX is volatile. Almost closed that gap there. But in an intraday, really this is just a wick through here, and we're rejecting off of the 23 right now. So I think this move is done on the VIX, and maybe we just have a back test. But this is so steep here, that channel that broke out, we could probably still see that 15, 16 area within time. So, all right. And if it gets extreme, you have 15. You can even close one or two of these gaps down low if we get that sell the news price action. Okay, and let's go back to SPY daily, and we'll just look at that summation index that I wanted to show on the weekend analysis. I think we'll look at it on, let's look at SPX. Just go to that beaker, McClellan, and the summation. So we have positive divergence on that oscillator. And here's the summation. So here's the fact here. We're in bearish territory. It's what we talked about. Heading lower. And I'm not looking for divergences on here. I just think this could test back up here to try to get into bull territory and fail from here. So this shows a lot of the market breadth. And I think this is going to oscillate. This is going to cycle all the way into extreme bear situation here, very similar to this zone. But in between these large moves, prices, and this is a very large, much larger scale than I think we're going to get into now, but that got all the way back to the extreme bull situation. So maybe I can show you a comparison. Let's go back a couple more years. And you see a downtrend happening even before the market topped. Breadth was already oscillating, cycling lower in a channel. And then each time you had this major low here, and then you had an ABC correction. Now we had an expanded flat. Looks a little bit more like this one. But the snapback, look how weak that is. We got to extreme bear. Or even the one before, that was just the negative divergence. So the extreme bear snapped back up to that pivot zone, the gray zone, and same thing. But then when this final full wave here was done, you had a major correction higher. It oscillated all the way back up to the extreme bullish. Okay, I don't think that's the case yet. I think we're just going to test this gray area. We're going to show a lower high probably, but I think ultimately we end up here. And now remember, I have a green zone here. It's possible that price after the bounce makes it to this low. We'll see what kind of shape goes into that low, and also our trend line here. I doubt that will hold. That is not our primary scenario, but I just want to be aware at that point. Okay, so that's why I have that there. Our prices, when this is all said and done, the third wave should probably be around that 5,000, maybe even to the 4,800, to where that former all-time high was. And then we get a bounce, and then this pivot might even come into play, where you get our fifth wave all the way down to, lower ranges, and around 50, maybe 56 or 4,600 or so. But we'll be able to measure those out after we get these bounces. Okay, we have nothing to measure that out to. We just have our visual places where prices possibly can go to, and that will come into play when you start boxing these zones. You have your volatility as Don Kaufman used to say, the volatility vol boxes. And so that could be a good support at the bottom of the box at 5,600. So anyway, I'm blabbering on. You guys have a wonderful trading day. We'll talk to you tomorrow.